If you're ready to find your path to success or take the success you're enjoying to the next level, stay tuned. Successful Living with Bill Napick is on right now.
Welcome to the show, Successful Living with Bill Napick, and today, Successful Living with Ted Geoca. He is with MaxOut Savings Advisors. If you're listening at one of our times of broadcast, especially the 11 a.m. broadcast on 1070 a.m., you just heard a full hour of Ted, and guess what? We're going to hear another side of Ted on our show, Successful Living. Ted, welcome to the show.
Good morning, Bill.
I love that. Your show is a super hit, and it also offers tremendous advice for one of the most important categories of our life, our finances. So let's tell people, first of all, if they're just tuning in, about your company and your show.
Okay, well, we work. Our main business is MaxOut Savings Advisors, and we do the radio show to kind of. I wanted to come up with a way to help people save money, and so we talk a lot in the show about saving money, how to save money, and we talk about what's happening in the markets, what's happening in the world, some political events, all of that wrapped up in the show to try to give people a different perspective of the world.
Because everything comes into play. And one of the things that's very catchy about your show that brought me in many months ago is you have a motto. Let's tell people your motto, because right there, that is great advice.
Yeah, our motto in our philosophy is to save aggressively, invest conservatively.
Let's say that again.
Save aggressively, invest conservatively.
And I tell my son that, who's 36 years old, all the time. I said, Blake, you need to listen to those words, as does everyone else. And I remind myself, because we are in a society and an abundant with riches here in the United States, certainly Houston, Texas, with all the economic opportunities. And if anybody watches TV, billboards, all those things, we are pulled all the time to spend money on stuff that we really don't need, but
that's exactly right. And things are so good in the United States, we don't realize it. It's interesting. If you see immigrants come over, they tend to save much more because they know things can change and things cannot go right. But in here, people are just much more confident, and I think that hurts the savings program. But the other real thing is you need to save for your retirement, and and we came up with this philosophy because it's sort of, people tend to do it backwards. What they'll do is they will save conservatively and then invest aggressively to make up for it, and that rarely works. It rarely.
Too late.
Yeah,
sometimes.
And so if you just keep it simple, you save as much money as you can, and then you conservatively invest it, you have a very high probability of success, and that's what we're looking for.
So let's also, when we talk about that philosophy of save aggressively, at what point people may be listening, and even if there's youngsters, and I'll say youngsters from high school, college, and beyond, they may not be listening, but their grandparents, their parents may be. So let's should we always have that philosophy or what? Because when we're younger, we have more time, but still.
Yeah, look, I think what you should always have that philosophy, because this thing, if you just build it up over time in small amounts, what we would like to see is you save a minimum of 10%, minimum. We use that number because we think most people can get there. When we started the show, we had people call and said, "Hey, Ted, I saved 20%." And they're going, "This is great. We've never heard this talked about like this." But 10% plus the company match, that typically is 3 to 5, 6%. 13% is the number that if most people save through retirement, they've done the research, will get you to a good retirement. You'll get a much better one if you save more. And then once you put away that money, if you get 10% plus the company match, or maybe if you get 13, 14 plus the company match, which is fantastic, at that point in time, you can go spend the rest of your money. We don't care.
That is great advice. And let's tell people, once again, the website is maxoutsavings.com. You can find information out about Ted's company, also access to the podcast as well, because you have acquired or put together quite an archive of great shows that through the years.
Yeah. In the AM 1070, The Answer's website too has got the podcast, and we've talked about all types of things. I don't know if the podcasts are still there, but back in 2007, we were discussing how the investment banks were going to fail. I was amazed I wasn't pulled off the radio when I said it. Because we laid out the case and explained the balance sheets of the investment banks was badly flawed. It was very unique, and we were right. So we come up with a lot of interesting things on there.
And Ted, as far as the financial world, let's tell people two things. One, how did you get involved? Why did you choose finances for your profession? Also, how long have you been doing the radio shows?
Well, I actually have a mechanical engineering degree from Texas A&M, and so I worked in the engineering construction business, in oil and gas business, for a number of years. And then we went through the 80s. There was a huge amount of turmoil in the oil and gas business at that time. And so then I was looking for a job, and I'm like, well, what do I really want to do? And I always liked investing. And when I was coming up, they had the hot Nifty 50, very similar today, where you had McDonald's, Xerox, IBM, Burroughs, National, NCR, those type of things. Now you've got Apple, Amazon, Facebook, the new, Salesforce, the new Nifty 50. So it was different, but I always enjoyed doing that. And so I decided, well, this is what I'm going to do. And I went to work for a brokerage firm, and then eventually started my own company, and went from there.
How long after you started the company did you see the radio platform and podcast platform become something that caught your eye?
Well, I'll tell you what I wanted to do it for a long time. And a lot of the firms would not let you do the radio because compliance issues. It's a lot of work. And so I tried it with a number of people to try to come up with a group that would want to do it. And finally, it was hard because it was a big risk. And so finally, I just did it myself. And actually, KNTH was just starting out. Brand new station, and they had some openings, which was we were very fortunate, and we started the MaxOut Savings Show, talking about savings and investing.
So many advantages from being on a platform, whether it's podcast or radio. In fact, I'm imagining one of them is when I first met you, you kind of feel like you know the person already, so that opens the door in a special way than otherwise.
Yeah, no, it really does. I mean, people do feel like they know me. They listen every week to the show. They get our monthly MaxOut Savings Report. And so, yeah, I've really developed, good friendships and relationships with lots of people that listen to the show, and a lot of them come and do business with us. So it's been interesting. And the other thing is the show allows us to bring on guests as well. And so we can bring on kind of decision makers, the political area, the investment area, really big people, which we try to get on from time to time. And it also helps us when we're doing the research. When we call up, some members of Congress, we was talking to the Federal Reserve the other day, and we, explained that, look, we're doing this radio show, and this is, we get the answers typically that we need to get to dig in and get to the bottom of things and bring people the real story on things.
That is super awesome. Let's tell people, as far as here we are at the end of the year, a great time to be thinking about our finances. We always should be thinking about them because that's, we're navigating through life, and it's just a very important part. But we're approaching a brand new year. It's going to be an interesting year. They all are, I guess. This one's an election year, 2020. It's got a great ring to it. What can we expect if you were to give us a few bullet points that are rolling around in your head? And I know you have quite a few.
Look, I think the key is going to be the election year, and this is really a bipolar election. You've got on one side Donald Trump, and the other side, we'll see. Maybe it's Elizabeth Warren, maybe it's Joe Biden. Joe Biden's a little more moderate. Elizabeth Warren is pretty left wing. Look, both of them are. Trump is a populist. Warren's a populist. Biden's maybe a populist. You're going to get a populist person in there, and they're all going to be talking about helping the middle class, helping the working people. This is a trend. It's interesting. This is a global trend, Bill. This is happening. Populism is happening here. It's happening in Britain. It's happening in Hong Kong. It happened in Chile. It's Iran. I mean, in France, all over the world. It's like this. So you're going to see much more populist talk. That's going to lead to volatility in the stock and bond market. So you're going to hear, hey, we're going to sit there and give away everything for free. You're not going to have to even work. People are going to get nervous. On the other side, you're going to hear middle-class tax cuts. You're going to hear, on the one side, you're going to hear we should nationalize Facebook and Google. And I think most left and right might agree with that, and for different reasons. And it's just going to be a lot of turmoil. It's a very polarized, probably the most since maybe the 60s, and you can come close to the Civil War on some of this stuff. And so it's going to be I think it's going to be a volatile year.
If we look at facts and figures, and I'm not saying I have, but I've looked at it a little bit, I would think these last 3-4 years, we have all done well across the spectrum of middle class, top, and when people also, I think some of the strategy on the Democrat side is that they are saying that they make it like it's a bad thing to be wealthy. We're in the United States. A lot of people come here because they want that opportunity to excel. And when they're super wealthy and anywhere in between do well, we kind of all do well.
No,
I'm not a genius, but I can
that's
see that.
exactly right. I mean, that's why the biggest problem, one of the biggest problems we have in the country is immigrants pouring into the country. Well, they want to be here. Think about that. And yet, this is a problem. But the problem is there's a disparity of wealth out there. And I don't even think it's that. I think the bigger problem is not that. I think it's people are starting to feel like it's a rigged game. And so we have to make sure it's a level playing field, and that's what we want to make sure happens out there, and which means you don't want to do bailouts. That's been very detrimental on the bailouts on Wall Street. You want to make sure that the taxes are set correctly. You want to make sure that we have as many tax breaks and incentives for the middle class to build wealth, to purchase assets and build up wealth. And then maybe higher up at the top, they don't quite get the free incentives that the middle class. That's the important thing, a level playing field. I don't think it's the disparity. It's always been there. The key is we want to have the across the board fairness.
So you see volatility in stocks and bonds. What other things are you seeing there, or should we prepare for?
Look, I think the dollar is very strong, and the question is, one of these currencies we believe is gonna run into problems. Maybe it's the dollar starts going lower. Maybe the Chinese currency implodes. China has problems. Maybe it's the Hong Kong dollar breaking, the Japanese yen, massive debt there. Maybe it's the Europeans who are completely incompetent. There's so many things. So I think currency is going to be a big issue for the next 1 to 2 years, and this is something we want to watch. And precious metals in that environment should do well.
Let's take it locally here for a second. More people are coming to Houston, Texas than ever before. More people are coming to Texas than ever before. I was in San Antonio the other day, and guess what? They're building all around. The city is, at least in the northeast part where I was, where my son is, it seems like they're exploding in all directions as well. Major road constructions projects are going on. How are we going to continue to see that flock of people coming to Texas?
I think Houston is the most international major city in the United States, which is amazing. Think about that for a minute. In Texas, low taxes, free enterprise, low regulation, and there's a can-do attitude in Texas. You've got companies are moving in from all over. A friend of mine builds factories, and he was talking. They're looking at putting some factories in Austin. They're looking at putting a new factory in the Port of Houston. Some of these factories, Bill, are coming from China. They're moving them out of China back to the United States. So if you want to put build a plant, if you want to manufacture something, the best place is Texas. You've got low taxes, low regulation. You got a can-do attitude. People there's a great workforce. You try to do that in California, you drive yourself crazy.
In fact, it makes me think about it. I think it was the late 80s, early 90s. I was doing business, and I worked for a company that at this time it's built up, but it was in Arcola, Texas, south on Highway 6. It was in the middle of nowhere, but we were a manufacturer. We were expanding into overseas markets, but certainly we were well established in the United States. But we had guests from Japan visit us on a regular basis to buy our products for distribution in Japan. And I remember when these guys came over and we made that drive from 59 south on Highway 6, they looked around at all this land and they were amazed. They were excited about the openness and the opportunities even back then.
Yeah, it's exciting. I mean, it really is exciting. There's so much opportunity. And the other thing that's happening too, Bill, is if you look at the tax rates in the north, in Illinois, New York, California. I was just talking to someone in New York yesterday afternoon, and they're like, hey, I'm trying to get this thing built here. I'm spending all this time trying to get it set up, and the regulations are just ridiculous up here. You have no idea. And they were actually thinking of moving their headquarters to Florida or Texas for part of it just to reduce the taxes. I think this is going to continue. I really do.
In fact, I was at In-N-Out Burger. There's been a big flurry of In-N-Out Burger in Katy and Sugar Land, where if you go there, it's a California chain.
Yeah.
And I went there yesterday. Parking was ridiculous. It was like a major event. There was policemen there to guide people through. But in any case, I'm talking to one of the guys that came from California to oversee the openings of these restaurants. And I said, well, how much is gas in California? He says it's over $4 a gallon. So, I mean, it is amazing. But let's go back here and tell people, we're talking with Ted Geoca, MaxOut Savings Advisor. Certainly you can check out his show at maxoutsavings.com or before this show from 10 to 11 on 1070 AM, doing tremendous work every weekend and all through the week. But let's tell people what else you want them to know about the show. Or
really, again, we really try to make it about savings and investments and about managing your retirement. And so we talk a lot about that. We're very conservative. We tend to we do a lot of risk analysis with our work, and it comes through when we're managing the client's retirement money, and also in the show.
And of course, people can call into your show.
Yes, yeah, and they can call and ask questions. And I don't think we've had a bad question. We've had some phenomenal questions. Yeah, my favorite question, I have to tell you about my favorite question. This lady called me up, and she goes, look, I have a problem. I'm working on my retirement. And so she goes, well, I said, well, let's see what you got. She goes, well, I have $160,000 in my IRA. So this is great. She goes, well,
and how old is she?
She was like 60, 63. Okay. She goes, I pulled the money out and paid the taxes. I'm like, which you
Ouch.
don't do. Okay, so she's lost probably a quarter of her money or more on this. And I'm like, and I didn't want to say this is a ridiculous side. You should. I said, well, okay, what else? She goes, well, we have our house paid off. And it sounded like it was basically $35,000. She goes, we have it paid $40,000. We have it paid off, so we don't have any expenses there. And my husband and I live off of our Social Security. Now, there was a lady I thought had no chance whatsoever to retire, and yet she made a bunch of huge mistakes, and yet she was able to do it. A couple things: she saved money, she had her house paid off, she lived frugally, and so she was able to retire successfully. And so. No matter how much money you make, Bill, there's a way to do it, but you just have to kind of plan through it.
And it's how much you keep and all those things as far as earnings, Social Security, savings are all come into play. Ted, you have children. If you were to tell anybody that, let's go decades. Let's say, what would you tell someone that is in their teens as far as financial tips? What should they do in your teens?
I tell you what, in their teens, they should get a job. Okay, and the reason they should learn to work.
Get 2 jobs. I mean,
they should learn to work. And I think that's more important than anything in your teens is have a work ethic. And too many people out there don't have a work ethic. I mean, I had a job, and then if I couldn't get a job, I'd figure out a way to come up with a business, because I was too young.
Me too.
And
I loved it.
Yeah. So, I mean, I know if it's a grocery store, it's H-E-B, if it's, whatever.
Cut grass, shovel snow.
Whatever. I think it's incredibly valuable. I don't care if you're going to be a doctor or what. I think it's invaluable to sit there and learn to work. In
your 20s and 30s,
okay.
Then what should we do then?
Okay, in your 20s and 30s, once you start a job. I've got 2 of my kids starting jobs up. One this week, one's coming up, I think, in a month or two. And so what I'm going to tell them is, and I've told them this, is, look, you want to put away 10% plus the company match. Now, in their case, I'm going to say, look, you're just starting out. Quite frankly, you don't have any expenses. You're going to live in an apartment, and so you've got good jobs. Put away 15% or more and just put the money away into your savings plan and get the company match, and just don't touch the money. Conservatively manage it. You have 30 years to retirement, 25, 30 years to retirement. This will set you up. You can spend the rest of the money. And the other thing I'm going to say is, look, you want to try saving for a home, because, again, a home is another thing that's going to build up wealth over the long term. Now, look, it's been a great real estate market, and we've had decades where you don't make any money. But if you have the house paid off when you get near retirement, you freeze you freeze your expenses. Remember, you're going to have, when you retire, you probably got another 20 to 30 years to live. People don't realize this. Well, if you can freeze your expenses so you don't have a house payment after that and your taxes get frozen, those are big chunks of savings you're going to have. So you're not going to have a problem 10 years, but you might have a problem 20 years. So you want to have that done. So plan ahead, make the investment in a home, and put the money into your savings plan.
And I will add, track your expenses at any age. That way, especially you'll know what it looked like for retirement. And even if you're in your early years, you at least know what you need and what you're spending and how much you can save. Ted, with the last 2.5
by the way,
minutes,
I mentioned that, and that's very important.
It really is.
Yeah, because when you just start out, you have more money to know what to do with, and if you don't track your expenses, your spending will go right through it.
Last 2 minutes, what else should people know?
I tell you what, I think the markets here, I think, are expensive. The Federal Reserve is pouring money in. The president's going to try to keep the market going up into the election. I think it's going to be difficult. I think the Democrats are going to do everything they can to sabotage things. Very volatile year. I think you want to continue to save money, but you have to understand you've got to manage your risk. That is one of the key things out there. Remember, back in 2008 and 2009, we went down 56% in the market, which means if you had $1 million, you all of a sudden had, $440,000. You can't retire. So protect yourself in this environment and save that money aggressively and invest it conservatively. That's the key to building up wealth. Bill, the reason I talk about this stuff is I try to make it idiot-proof.
It's simple.
Yeah, if it's simple, it works. And so if you keep it simple, 10% plus the company match, you should be doing more than that, but that's kind of the goal. That'll get you where you need to be for retirement. I don't care if you're making $30,000 a year or if you're making $300,000 a year.
Save aggressively, invest conservatively. Those are just golden words that should be on everybody's mind when they think about finances. So people could check out your website, MaxOutSavings.com. Where'd you come up with the name? That is just easy to remember. MaxOut Savings, MaxOutSavings.com. That's a stroke of genius, Ted.
Yeah, I wanted to have a show. When I started the show, I was like, what can you talk about? Investments, the world, politics. And I looked, the savings rate was 1%. I said, let's talk about savings. That's something we've got to change in the country, and that's why I came up with everything.
And if people want to reach out to you for your services, what should they do?
You just go to our website, MaxOutSavings.com. You can request an appointment. We have a free initial appointment, no charge. At a minimum, sign up for the free newsletter. It's free. We don't bother you. It's a private list. It goes out once a month, and that's it.
And they can go to the website to get the newsletter, and the newsletter is every week?
Monthly,
once a month?
Monthly, yeah.
Very nice. Simply go to MaxOutSavings.com. Check out Ted's show. It's on right before this one, 10 to 11 every Saturday on 1070 a.m. One last word, Ted. MaxOutSavings.com.
Save aggressively, invest conservatively.
It's said so well by the man that coined that phrase. Thank you so much, Ted Geoca, MaxOut Savings Advisors. Check them out at MaxOutSavings.com. You've been listening to Successful Living with Bill Napick, and today, the one and only Ted Geoca with MaxOut Savings, MaxOutSavings.com. Get the newsletter. And, of course, as always, go to RadioBill.net for more information on this show and to see past guests. Thank you, Ted.
Thank you, Bill.